Hi there, I'm Chris McManus, Managing Director of McManus Asset Finance. We are the Business Money Facts Asset Finance Broker of the Year 2024. And in this video, I'm going to be talking to you about car finance. Now, car finance is something we do a lot of. A lot of our clients ask us to assist them with financing their personal and business vehicles. And one of the questions we get asked a lot of the time is, what's the best way of financing my car? Now, there isn't one answer to that. There's lots of products in the market that you've probably heard of: hire purchase, personal contract hire, vehicle leasing. And it can get really confusing as to what each product does and what's the best option for you as a personal vehicle user or if you're buying for business. So, as I said, there's lots of different product names out there, but fundamentally, there are only two ways of financing a vehicle. You can either have a facility which allows you to own the vehicle at the end, or it's a rental facility. So all these different product names all boil down to one of two options. Do you want to own it or do you want to rent it? So first question I would always ask a client is, what is your purpose for buying the vehicle? Is this a vehicle you want to own, or is it just a tool for you to get from A to B? And that should direct the conversation as to what is the best option for you. We tend to have two types of customer. We have a private individual customer, perhaps a company director or high net worth client, and then we have the business user customer looking to buy vehicles for their company. And that will also lead to the different options that are available to you. So focusing first on private customers. So these can typically be an individual looking to buy a executive vehicle, somewhere between sort of £25,000 and £50,000, and can go up to very high value vehicles, prestige cars, classic sports cars, and all that sort of thing, the really exotic vehicles which we can also finance. Now, if you're buying those cars and you're buying it privately and you want to own the vehicle, you're looking to do it either one of two ways, which would be a hire purchase or a lease purchase. And the difference between the two is simply that a lease purchase will have a lump sum balloon payment at the back end of that agreement. A balloon payment is simply a large deferred capital amount that allows the finance company to defer a lot of the repayment that you would otherwise make and allow you to have a cheaper monthly payment in the first part of the finance facility, whether that be anything from 3 to 5 years. This type of facility is also best if you're buying a used vehicle or a nearly new vehicle, where leasing options tend not to exist as much. This will be if you're looking for a particular bargain deal, maybe it's a year-old vehicle, or as I said, perhaps something a bit special, a classic vehicle or a sports vehicle that is something that you're going to want to own for the long term. So HP has no balloon payment. Lease purchase will have a balloon payment at the end, and that gives you your lower monthly payments. In terms of deposit, typically it's anything from 3 payments in advance to 10% deposit as a rough entry point. But anything up to a 50% deposit is doable as well. From that perspective, it makes the underwriting from a finance company's point of view a lot easier if they've got a lot more security in the vehicle. But you don't need to have a huge deposit to finance a car privately. What if you're not that bothered about owning the vehicle at the end? What if a car is just a tool for you to get from A to B? Well, in that scenario, vehicle leasing is probably a better option for you. You might have heard of contract hire and personal contract hire. Those are the facilities that are really perfect for you in that scenario. So you pay a simple monthly rental, you have a new vehicle delivered to you. At the end of 3 or 4 years, typically, you hand the vehicle back and you get a new vehicle and you go all over again, and you just rinse and repeat that year after year. You have a fixed cost. You don't have to worry about depreciation. You don't have to worry about disposing of the vehicle afterwards. But you don't then benefit from any upside if the vehicle is worth more than it's expected to be at the end of the agreement. Now, also with that type of facility, you can have maintenance and servicing built into that contract for you. So for one fixed payment, you can get pretty much hassle-free motoring. And it works really, really well for people who, as I said, are not that concerned about owning a vehicle, but they like to have a new vehicle that's replaced every 2, 3 or 4 years. Now, the options as a business customer are not that different. You do still have the option to own or to rent. And typically the rental option, contract hire, would suit a large fleet user. So if you run a business with 10, 20, 50 vehicles, that are used for your staff to get from to see clients or to go out and do their work. A fleet type of finance product is probably better for you, where you have access to a fleet for a fixed monthly cost, and the vehicles can be rotated amongst staff, and it's a perfect thing to do to promote your brand perhaps, and have the reliability of new vehicles that are on a replacement cycle that's easy to budget for, and you don't have the hassle of disposing of the vehicles at the end of that contract. However, one of the downsides to vehicle leasing is that it tends to focus purely on new vehicles. That whole industry is set up to get new cars into the market, so there's discounts offered to assist a business user to have a brand new vehicle on a lease rental facility. And that's why they focus purely on the new vehicle mark for that. So if you like a bargain, and you typically might want to buy a vehicle that might have 6 or 12 months on the clock, the vehicle leasing option probably isn't available to you. So then you're looking at a traditional hire purchase or lease purchase, as we mentioned, which is simply a hire purchase with a balloon payment at the end. You might be familiar with the PCP product, personal contract purchase. Well, that product, by definition of its name, is for an individual. It's a personal contract purchase. But a PCP is it's exactly the same as a lease purchase, which is a hire purchase with a balloon. You pay your monthly payment. At the end of it, you own the vehicle after you've cleared the balloon payment. So what happens when the balloon is due? Well, a balloon for a limited company is simply a large deferred payment. So you need to make that payment at the end of the 3 or 4 or 5 years that you've been financing the vehicle for. However, you do have some options around that. You could refinance the balloon, and we do that a lot for customers that decide they want to keep the vehicle for another 2 or 3 years. Or you might want to sell the vehicle, and there's normally some equity in that vehicle which will allow you to clear the balloon and have some money towards a deposit on the next vehicle. Or you might just want to sell the vehicle and keep any upside, and you're free to do that. But that balloon does need to be cleared. It isn't a case of handing the vehicle back and washing your hands of it if you're a limited company. Now, this is quite interesting. If you've purchased a vehicle as an individual, and you've done a hire purchase or a lease purchase agreement, and if you look at your finance documents, you will most likely see that it's marked as a regulated finance agreement. This will mean that it's under the protection of the Consumer Credit Act and Financial Conduct Authority. In very simple terms, it means there's loads of benefits to you and protections for you as a consumer. Now, one of the things I wanted to mention, which you might be interested in, is how it relates to balloon payments. So we've already said that a balloon payment is simply a large lump sum that's left to the end of the agreement that you would pay. And let's say you've done a 4-year lease purchase agreement, or a PCP, it might be called, and that balloon has now fallen due and you're 4 years in. So what happens if that balloon figure that you've got to pay is more than that vehicle is worth? So sometimes people panic about this because they think they're going to be hit with a shortfall, they've got to cover the difference. Well, if you've done a regulated finance agreement, there is a clause in your contract which you should look out for. And these are your termination and your repossession rights. It'll be on page 1, probably, of your finance document. The one that's most important is your termination rights. Your termination rights allow you as a regulated customer to terminate your agreement once you've made more than half of the total amounts payable. The total amounts payable on a regulated finance agreement is made up of all of the costs that you're going to pay. So your deposit, all your monthly payments, and any document fees and the balloon payment. You add all those figures up, divide it by 2, and once you've paid that amount, you're in a position to terminate that agreement early. And what does that mean? It means you can contact the finance company, you can tell them you want to exercise your termination rights, and you're going to hand over the vehicle to them, you're going to surrender the vehicle to them. And as long as that vehicle is in good order and there's no more than normally expected wear and tear to that vehicle, you can exit, you can voluntarily terminate that agreement. And if there is a shortfall in that balloon, it's no longer your problem. That's a protection you have under the Consumer Credit Act. So have a look at your contract. If you have a balloon that's due and you're concerned that the vehicle might not be worth sufficient to clear that balloon payment. this particular feature of your deal isn't shouted about particularly. Dealers don't raise it because they don't want to be left holding the baby, so to speak. But it's a right that you have as a regulated customer. As an individual, if you've signed to a regulated hire purchase or lease purchase agreement for vehicle finance. So look out for that. That is your termination rights. Any questions, let us know. So another difference, I suppose, between an ownership facility and a rental facility is that if you've acquired a vehicle on an ownership facility, a hire purchase or a lease purchase, you have the ability to end that agreement relatively painlessly. You can get a settlement figure at any time and you can pay off the finance, sell the vehicle, do what you want with it, and the agreement will end. If you've leased a vehicle, you are tied into that contract for that period of the lease. So if you wanted to change a vehicle a year into a 3 or a 4 year contract hire, it can be expensive to get out of it simply because the way the deal is structured. You're getting a lot of benefit in that facility by having a fixed monthly payment with a service and everything built into it. So the price you pay then is a lack of flexibility if you decide that vehicle isn't for you, or perhaps you want to change it. So bear that in mind in terms of your decision making. Are you likely to want to change the vehicle in the short term? If that is likely, you might want to be thinking about a purchase facility rather than a rental facility. Now, we see a lot of customers come to us who have located a vehicle and they've gone to the dealer and they've had a quote for finance from the dealer and they ask us if we can beat that price. Now, there's two scenarios here and they often come up, which is there may be a particularly attractive offer from a dealer at any given moment. They might have an incentive on to offer a 0% interest deal or something like that. And in that scenario, it's very difficult for us as brokers to compete on a 0% interest deal. But there are normally some clauses around that make it a little bit worth considering other options. So, for example, they might offer 0% interest, but they might want you to put a 50% deposit on the vehicle. And if you've got the money to do it, great, you should do that because you're not going to get it any cheaper than 0%. But if you haven't got the deposit, or you might think, well, actually, I only want to put a 10% deposit down on this vehicle, then financing it with a brokerage like ourselves, you're going to be paying some interest, but the difference may not be as much as you think. And that extra 40% of cash in your business or in your pocket might be worth more to you than the loss of that for a 0% deal on the vehicle. So have a think about that. And the other thing to think about in terms of the dealer finances is that they tend to be offers available to you for new vehicle purchases rather than for used. As I said, they focus on the new market for these special offers, but for used vehicle financing, they tend not to have the special offers and the discounted interest rates. And that's where we win an awful lot of business because we can deliver for you on the used vehicles that you might be looking to buy, and we regularly beat dealer financing options. Another thing we get asked a lot about is the tax implications of financing cars. Now, we're not tax advisors, so we'd always recommend you speak to your accountant about it. But what we can do is talk about some of the features of the different products and how they might work. But for your own tax advice, you need to get professional guidance. If you're buying a vehicle or you're financing a vehicle as an individual, then you're going to be paying for that vehicle out of your post-taxed income. And that's absolutely fine because you don't have any issues around personal tax or benefit in kind, that type of thing. But if you're having a vehicle purchased through your company and you're having personal use out of it, which almost everyone will, then there's going to be a personal tax P11D impact on you there. So speak to your accountant about that and make sure that you're getting best advice in that area. If you're buying a vehicle as a business, there's, as I said at the start, there's two ways of financing it. You can own it or you can rent it. Now, if you're owning the vehicle, as any other asset, that will give you the ability to claim annual investment allowances against your reduce your corporation tax liability. So again, speak to your accountant about how that can best fit your needs. And then if you were to rent the vehicle through a contract hire, that is simply a rental facility. So there'll be no asset on your balance sheet, but the rental payments can be go through as a business expense through your P&L, and that will reduce your corporation tax each year as a rental cost, as any other rental that you might have within your business would be. So to sum up, we've spoken lots about car finance, and the different options that are there. And it's really important to get some good impartial advice when you're getting your vehicle financed. Now, a lot of people go to the dealer, they take the dealer's first option, and that can often be great. But it's always worth speaking to someone else, someone impartial that isn't sort of beholden to selling that vehicle, making sure you do the deal with them. They might not have other options available to them other than their own in-house finance option. So that doesn't necessarily guarantee you the best price, the best deal for your circumstances, and often it can't be tailor-made to suit your needs. So always speak to someone who is impartial and can give you a second opinion on that, and may be able to save you some money as well. So I hope you found that interesting. If you do need car finance for yourself or for your business, do get in touch with us. You can call us on 01443 800 621. You can email us at info@mcmanus.finance, and one of the team will be delighted to help you. Thanks for watching, and look out for our next video.